Record highs, record highs, record highs based upon NVIDIA. We've got green across the board at the moment. Let's look at some charts together. You're gonna see a lot of lifetime highs today here. This is the first one. We teased a break a few days ago. We started a slip on the last day of May, reversed that hard on the 31st, and there we go. Zip, up it goes. So up in the ionosphere, it's not nothing, as Jordan would say, but we are getting close to a dashed line here, which constitutes the midline of this multi-decade channel. Let's see if I can show that better by stretching this chart a little bit. We'll stretch it this way, we'll stretch it this way. We'll zoom in. Yeah, you can see what I'm talking about a little bit better. That midline there, we're getting rather close to that. The last time we did that was in March and then backed hard away from that. So that dashed line does have some significance, but you know, with an ascending channel, you can bounce all you like off that and keep going up. You know, it's going to the right and up as well. Anywho, there's the normalized chart again. The diamond, Dow 30, this is not at lifetime highs. It's recovering from its multi-thousand point slog down. It bottomed on the 30th, and it's undone about half of that drop right now. The bonds, this is a couple of possibilities here. It just happens to be just about perfectly at the apex of the symmetric triangle. So could have a little bit more to go. Another way to look at this though is by way of the TLT, the ETF. What we've done is we've tidily sealed up this gap like so. This gap took place between the 28th of March and the 1st of April. And so that gap itself was at 93.36. Today's high, 93.31, a nickel away. Pretty good. So I guess tomorrow we'll answer that because it ain't gonna, you know, go up 2 pennies or something. It'll either violate that gap and off we look to the ZB, or it'll respect that gap and then we can consider that, as we did with Starbucks yesterday, our prospective exhaustion point. Still on the XLU puts, it's down, which on a day like this is an accomplishment in itself. I've got a really tight stop on this, just yesterday's high on the XLU. That diamond pattern I still think has, at least is interesting. I mean, we are so high up with respect to that pattern, it kind of doesn't matter. That dashed line, the midline of the channel on the spider, same deal with the XLU. This goes back for many decades. And here's the dashed line, which for a long time, years and years and years, represented very strong support. You could see year after year after year, and on and on and on. The one brief violation of that was during the COVID crash, then whoop, right back up, back to sport again. It's almost magical. I mean, look at this, incredible. That dashed line has and it's simple. This is not painted in after the fact, 50% point between those two parallel lines. But the cool thing, if our diamond friend did anything, it cracked the price well below that line. So now we're in the lower half of that channel instead of the upper half of that channel. And we tagged that almost perfectly right along here, just a couple of weeks back in the middle of May. Still worth watching. I'm not bothering with the NEE anymore, next era. I still think, I mean, obviously if XLU goes, this will go too, but I'm just sticking with the ETF. I've got September puts on that one. DG, which this is not, I'm just kind of leading into this. DG, Dollar General, has taken a hard tumble today. You and I have talked about these dollar stores before, the two prominent ones being DG and DLTR, the one on your screen. This is following in sympathy, it seems. Not sure who had what news, really doesn't matter. But DLTR, I've got puts on this, and this is down almost 6%. Looks good. I purposely got kind of farther outputs, I think like November's or something, to give it some time. But yeah, this is, I hadn't looked at these charts in my life a couple of ago, but we've looked at them, you and I, a few times since then, and so it's shaping up. Over in oil land, APA, another put position. This is threatening this support level here. It hasn't quite broken it yet. It's teased a little bit. This red dashed line here at 20.79. This represents support of this rather substantial pattern, like so. So it's respected support thus far. It puts on this too, but that would be a pretty big deal if we violated that, because that support has held for months, something like that. Almost, very long time. Adjunct to this, there's Schlumberger, SLB, and this is actually down 0.6%, and it already cracked under this support level. And let's just add one more horizontal here just to kind of anchor it like so. That would be our next support, to watch for. So energy, definitely shield your eyes, Frank. It's NVIDIA again. I'm actually kind of curious if I can come up with this real quick. Bear with me just a sec. I wanted to see, do we have the market cap? Oh, there it is right there. 2.864. So we're getting close. We're getting close to 3 trillion. I guess it hasn't crossed the finish line quite yet, but there's the whole history of the stock. Currently at $1,221. This is literally a penny stock back in the day. One of the most incredible stocks of all time. And of course, the big event here is the split. I think that on Monday, the cheaper, so to speak, stock is going to be out there. So there's a lot of excitement about the forthcoming split. That'll really change things in terms of options, opportunities, and kind of the availability of this as a trading vehicle to more people. We've been inside this ascending channel since the autumn of 2022, when it was about 1/10 the price it is now. And we're not mashed against the channel yet, but we're getting there. We're getting close. But this is kind of like kryptonite for bears. But it has been responsible for just continued success of tech stocks. And here we have the NQ. As I said, we're up at the moment 336 points, slipping above the peak we had seen back on May 23rd. A fellow wrote me saying how well Unity's going for him. That's great. We've talked about this before in terms of the topping pattern being at the bottom of the chart. But you know what? It works. It works. There's nothing but, look at that. It's almost every day red. So he's just cheerfully hanging on those puts, letting them grow in value, because I say again, psychologically, it is, ipso facto, the converse of lifetime highs, in that just as lifetime highs beget more lifetime highs because everybody's a winner, same thing in reverse. Lifetime lows means everybody is a loser. Every single person has a loss in that. And a crowd, some portion of that crowd is going to each day be like, forget it, and just get out. And so that's the selling pressure that's there. Whereas when you deal with lifetime highs, a certain portion of the uninvested crowd is like, I can't stand it anymore. And they just put the buy order in. And that's what's driving NVIDIA. Because there's no doubt today, there are people who bought NVIDIA today who've never had it in their lives. They can't stand the FOMO anymore. So that's Unity. Bitcoin is holding above 70,000. It's getting kind of close to this breakout level. We'll see. I haven't traded crypto in a couple of years. I find the chart ceaselessly interesting. It could absolutely get up to 80,000 in the coming weeks, but it sounds a little silly good, but it has to cross this first. Well, obviously, there's more to it than that. That was the lifetime high, and a breakout above that line would be a nice, clean breakout, but it's got a couple $1,000s to go, or at least 1,500 or so. It's a little odd, I must say, that Marathon Digital, MARA, is just, because Bitcoin's been exceptionally strong, it's just kind of stuck, even though you would assume that this would have been almost like in lockstep. On this very green day, might as well look at some old long ideas. Cricket up almost 6%. Nice couple of days on that one. HP Inc., that is HPQ, the symbol. We are not a lifetime high, but definitely doing okay. I realize HPE is, because of earnings, really blasting higher today, but HPQ, I like this chart better. There's a lot more to go on. Intuitive Surgical, long-time winner. ISRG, lifetime high on this one. Up almost $10, 2.37%. JD, which is nowhere near lifetime high, but is a cool little bounce play just from these depths, coming off of that green tinted bullish base. Our old friend Oscar, OSCR, up over 4%. Nice little reversal there away from, so we've got this beautiful basing pattern here, and then we've got this miniature continuation bullish pattern like so. We fell hard to that, but we seem to have found some stability there. Skechers, SKX, also a lifetime high, up about 2%, having emerged from this range. And the last of these, BECO, BECO, another very good looking inverted head and shoulders there. A nice pop today, almost 9% on BECO. So obviously all these guys cheerfully participating in the bull run. I made mention of small caps earlier not being at lifetime highs. As I said, those back in November of 21, which seems like a century ago. That was when that happened. As it is now, it's definitely the weakest of the big equity ETFs. And we've got important support right along here, which if breached would really open up the prospect of moving lower and lower within this multi-year range that it's been in. And one last chart, I don't remember if I've shown this to you or not recently, but just got to drive home the breadth again. This is the equally weighted S&P divided by the normal S&P, and as you can see, it is a very ugly chart. It's breaking down in a big way, and that's because a smaller and smaller and smaller quantity of those 500 stocks are accounting for all the gains, because a lot of them are really underperforming, and this ratio chart says it better than I ever could. That's it.